In a recent video, I discovered that you can actually keep more of your money as a sole trader than a limited company structure due to recent increases in dividend tax in the UK. So that left me wondering, are there actually any benefits left to having a limited company? Well, yes, there still are. And here are the main ones that you may want to consider. For me, the number one advantage is pension contributions. A limited company can pay your pension directly as an employer contribution up to £60,000 a year. And that is a business expense that will reduce your corporation tax. And there's no personal tax at all going in. This is the single most tax efficient way to extract value from a limited company when you're at high income levels. It's way more efficient than salary or dividends. Sole traders can still contribute to a pension, but only after they've already paid taxes on their money. The next benefit of having a limited company is limited liability, meaning your personal assets, such as your house and your savings, are protected if the business is sued or goes into debt. As a sole trader, you're personally liable for everything. Advantage number 3 is retaining profit rather than taking out all the money if you don't need it straight away. So if you leave your profits in your limited company, you'll only need to pay 19 to 25% tax, and you can keep them there in the bank account until a following year when you might need the money more. A sole trader can't do this. They'll get taxed on all of their profit as soon as you make it, whether you spend that money or not. Advantage number 4 is income splitting with a spouse. If you have a spouse or a partner in a lower tax band, you can make them a shareholder in your limited company and split the dividend income between you using their personal allowance and lower rate tax bands. This is something that's not available as a sole trader. Lastly, an advantage of having a limited company is the separation and professionalism. You have a much cleaner separation of business and personal finances. This also makes you have a more established appearance to clients, banks, and insurers, and gives you continuity if you ever bring in another director or investor. So in summary, if your only goal is to maximize the monthly cash in your bank account right now, then the sole trader wins on tax. But if you want to retain flexibility, protect your personal assets, and build something sellable or extract value from a pension rather than cash, the limited company structure still wins. It becomes more of a question of what you actually want to do with your money rather than just the tax.